Guys, good evening. It's Angelo Christian. Thank you so much for watching our podcast. Angelo Christian Lending, your nationwide lender. Tonight, we come to you live every Thursday. We come and talk about real estate, market, the credit, everything like that. What's going on in America? And there's a lot of stuff that's always happening with housing and real estate and credit because it's such a big integral part of the United States economy. There's a lot of things that the Federal Reserve trying to raise rates, home builder sentiment. A lot of home builders are depressed. Some of them are confident depending on the type of houses that they build. So there's all this type of stuff that's happening out there. So what do you do? Should you buy right now? Should you sell? Should you invest in real estate? Is now a bad time to get a loan? Is it a good time to get a loan? What type of loan should you get? There's all these different types of things to think about. So anyway, I appreciate all of you guys watching the show and the channel. And, I got some stuff I want to talk about tonight. Some things that are kind of happening, what I'm seeing in the market. And if you guys don't remember, we're a nationwide lender. We have, all different types of programs, FHA, VA, conventional. So this is a Partagas Lusitana. It's one of Michael Jordan's favorite cigars. It's been sitting in my humidor for over a year. That's a big one. That's a big, huge Churchill. You got to be ready. 2 hours smoke for that. Wow. Partagas does a very good job. One of my favorite cigars. I like Cohiba better, but MJ likes Partagas better, so MJ is the man. But nonetheless, we're not here to talk about cigars. We're here to talk about loans and real estate and money and credit and all that stuff. So appreciate all of you guys watching the show, the channel, all your support. We're here to educate you, empower you, give you the information, knowledge to help you, to give you the access to capital. Call or text us so we can help you with any type of loans. 832-431-6331. That's why we're here. Only lender I know that's open 7 days a week for you. I don't know anyone else that is. Most of these guys shut down at 5 o'clock. Definitely not open on the weekend. But anyway, so, as we said earlier, you're in a situation where home prices have somewhat flattened or they've gone down a little bit. We've also seen that interest rates have risen. So you've seen a lot of people, they're tapping into lines of credit. And remember, we offer home equity line of credit. We do primary, whether it's your primary residence, secondary home, investment property. We have the all-in-one HELOC. We also have second lien HELOC programs. And those are really good because, sometimes you want to have that loaded gun ready in case there's an opportunity, right? And you don't have to pay interest if you're not borrowing the money, but you have it ready to go. And that's why lines of credit are very powerful because you never know. You want to invest in a business, you want to pay off debt, you want to buy another property. Let's say the market does pull back 10 or 15% and you can find a great property at a discount. You have your line of credit ready, right? So a line of credit can and does make a lot of sense versus doing a cash out home equity, because the cash out, refinance home equity, you start paying interest on that right away. Now, if you have a plan where you want to use that money immediately, that can make sense to use the cash out refinance versus a line of credit. I'm just letting you know that with a line of credit, like let's say you pull the money out and you pay it back, you can use it again. And that's kind of the thing I like about a line of credit versus, a cash out refinance. So, it's up to you. Based on your situation, what you're trying to do. You know, the other thing is that a lot of people, they think you can only use a HELOC for purchasing a property. You can actually use a HELOC for refinancing in the properties too. So it's kind of neat because, you know, let's say you already own the property and it's free and clear, or you got a lot of equity, you can also refinance into a HELOC. You don't have to just do a purchase with a HELOC. You can also refinance. So it makes it kind of neat because, you know, whether you're looking to purchase or refinance, whether it's an investment property, a primary residence, or a secondary home, it makes it very attractive. You know, and you know, depending on the program, you can, you know, usually for primary go up to 90% loan to value, excluding Texas. Texas is 80%. But then, you know, investment properties up to 70% loan to value. So it's a great product, you know, if you have equity in your property. So nonetheless, you know, my thought is that, you know, the rest of this year is kind of flat. I think next year, you know, my prediction is that rates will come down a little bit and the market will pick up a little bit. I can't see us, you know, staying flat, you know, the second quarter of next year. We're still talking about higher rates. Could be wrong. You never know. I'm not willing to bet the farm on that, but I do think that it's, you know, possible that rates could come down a little bit, and you could see some, you know, more people step up, more sellers step up to the plate, more buyers step up to the plate, and get more activity going. But obviously, you know, nobody knows for sure, right? But that's my 2 cents on kind of what I see. You know, but then you see places like Japan, where Japan stayed in the deep, you know, stagflation for decades. So I don't know. You know, nobody knows for sure what's going to happen. I'm just kind of giving you my prediction of what I'm thinking. You know, obviously, I mean, I really don't know. Some of this is, you know, historic playbook repeating itself. Some of it's uncharted waters. And we're not really, you know, we don't really know for sure. But I will say this, that when you find opportunities in the marketplace, and there's good opportunities to buy real estate, and the values make sense, you know, you're buying something 60, 70, 80 cents on the dollar, and you see the upside, then go for it. You don't have to worry about what the market says. See, when you find something that's a good deal, it's a good deal. It doesn't matter what the market says. So if you see something out there, you know, we get a lot of investors that call us, they find great opportunities, and it's got a lot of equity. They don't care about what the interest rate is. They don't care about what the market says. They're looking at the bigger picture. If you find deals like that, go for them. Don't wait. Don't sit on the fence. If you find a great opportunity, go for it, you know? Conversely, you know, don't overpay for something. If it doesn't make sense, you know, don't buy it just because you got approved or you got good credit. If the deal doesn't make sense with the property, don't go for it. There'll always be other opportunities. Don't try to push your luck and overextend yourself if the deal doesn't make sense. You know, so that's, you know, one thing I'll say that I've learned, that sometimes it can be dangerous when you do have available credit or capital. If you don't know what you're doing and you're not prudent, you can also get yourself in trouble. So you do want to be careful with that, because you could also hurt yourself too. So, you know, anyway, I think you guys are getting the moral of the story, what I'm saying. You know, we offer all different types of programs. We do FHA, VA, jumbo, non-QM, construction loans, land loans, So we're here as your nationwide lender to be able to help. We have a new self-employed loan program where you just need a profit and loss statement. You don't even need 12 months of bank statements. That's a great program too. So we definitely want to help you guys, to get your, deal funded. That's why we're here, to be your servant in the lending space. We get those problems solved, get those loans funded. And we're open 7 days a week where you can call or text our office, 832-431-6331. We're here to help you to figure it out. We work together with you. No upfront fees. We don't charge any upfront fees. There's no application fee that we charge up front. No deposit. There's no contract between us. You can always change your mind, but you have the freedom to choose. And we want to be there as your friend and as your lender to figure this out. So we talked about HELOCs and how it's a great program. Another thing that's also very popular, what we're seeing a lot of, is buying a home from family. When you buy a home from family, it's a great opportunity. It's a very unique situation. If your mother lived in the house or owned the house and she, for whatever reason, wants to sell the house to you and you're her sibling, you can buy the... do you have any mortgage loans for disabled, non-working people with an income of $4,300 a month? Mo asked, possibly, but we have to see that question. You just can't answer it like that, yes or no, because it takes more information that we have to know. So we have to understand what's going on with your case, which we want to talk to you to learn more. So call or text us at 832-431-6333, and we want to talk to you to see what we can do to figure that out, because it's possible, but you got to know more. So reach out to us. So anyway, going back to buying a house from family, it's a great program that we really love, because you can buy a house from your family with no money down, 100% financing. That means you get the down payment. There's still a down payment and closing costs, but you get to roll those in or get those gifted to you when you're buying from your family. So that's a great thing. So normally, let's say you're doing an FHA loan and you had to put 3.5% down for the down payment, and then you had to pay 6% for closing costs. If it's a $300,000 property, that's 9.5% down. That's almost 30 grand. You can get that rolled in or included with a family gift of equity. And conventional, you can do that as well. But it has to be for primary residence or second home only. It cannot be for an investment property. But it's a great program. So, most lenders are not aware of it. They're still going to charge you for the down payment and the closing costs. With us, we can get that stuff included. So whether you go conventional or FHA, the biggest thing to know on it is Jocelyn Capel. I know this off subject. What's your thought on UMW, conventional 1% loan? Is that a mortgage product that you're referring to with a wholesale lender? Is that what you're asking about? I gotta make sure I read what you said correctly. So, but going back to what I was saying with the family gift of equity program. So, somebody's got to be living in the house that's going to be buying the home or selling the house. So in other words, if the person getting the loan lives in the house, that's good. Or the person selling the house lives in the house, that's good. If neither of you guys live in the house, then it reduces the loan to value down to 85%. So just keep that in mind. It sounds good. Jocelyn, 1%. But we got to look at it and see if the deal makes sense. If you have any information, send it to me. Hey, Adrian, you had a question about a house you bought. Okay, go ahead and post your question. Jocelyn, yeah, send me over the information. I got to take a look at it. I don't know, if it's a good program or not. We used to offer a conventional 0 down. And I will tell you, it had higher interest rates. It had more requirements. A lot of people didn't like it, but I don't know. You gotta look at it and see. This is what I will say. If anyone's putting less money down, like 1% or no money down, it's usually not going to be a better deal than if you put money down, because somebody's got to take on that risk. So just keep that in mind. So it sounds great on paper, but usually when you break it all down, it's not always. I mean, it depends on how it's structured. And what I mean by that, if you have a government agency giving the down payment assistance, they're going to forgive it, and they got a few $1 million to do that with, then it makes sense. But if you have a lender that somehow came up with a product with limited funding and just to give a lower down payment and has a ridiculously high rate or some weird requirement, then maybe it doesn't make a lot of sense, So you got to look at it and see. My condo is double in price. Would you recommend selling it or getting a HELOC? That's a good question, Adrian. So, here's the thing, that everybody has different opinions, different objectives, things that they want to do in their life. So I don't know you, and I don't know what your plans are or what your goals are. I can tell you, if you're asking me what would I do, assuming you have a tenant in there, and if it's me, I want to build more passive income, more rental property income. So I don't want to get rid of my real estate assets. I want to keep them and add more. So I would cash out against it, but I would make sure that I would do something very good with that money. Either buy another property, or pay off debt, or do something. If I like the property, it's a good location, then I don't want to get rid of it, right? If I don't like the property and it's not a good location, then I'll get rid of it and sell and get the money. Or if it's a good location, I'll keep it. Because the thing is that, we don't live forever, and you don't want to work forever. You want to have, passive income, ideally. I don't know if you're thinking like that. I'm thinking like that. If you have a few hundred rental properties, then, you don't have to work one day. And, real estate's not going to go anywhere. There's no invention that's going to get rid of real estate. So I would say keep it, but make sure the rental income covers the payment, and go buy another one. Go buy 5 more, go buy 10 more, and expand and grow. That's my thought process. But you have other people that think differently, and that's okay. Some people don't want to deal with the tenants. They don't want to deal with the hassle, the headache, the maintenance, whatever that situation is. So I don't know. Everybody has their own opinion on it. But if you ask me what's my opinion, that's my opinion. And we can give you a HELOC on a rental property too. So if you want more information about it, call or text us. We want to help you at 832-431-6331. Let's take a look at it. Let's see what we can do. No, Adrian, not all banks allow you to use the HELOC to buy more rental properties. We're okay with it. Jose. How long do you have to be at your new job to get a loan? It depends. Some programs, you don't even have to start the job. You could have an offer letter and not even start the job and be there within, start within 2 months. Some programs you have to start within 30 days. Some programs you have to be there for at least 2 weeks. It just depends, man. I have to look at your situation. Thing is that kind of like, I can give you, close, approximate answers, but it's kind of like when you go to the doctor and they got to look at everything and then give you the best assessment. I don't know what type of loan you're doing, what's your credit, what type of job do you have. We have some programs you don't even have to be at the job. You could start 3 months in the future and then get the loan. In some programs you have to be on the job for a month. So it just depends, But there is hope and there's opportunity. So reach out to us. Call or text our office. We're open 7 days a week for you. 832-431-633. I want to hear from you guys. Don't be a stranger. We want to see what we can do to figure this out to help you. So I appreciate all of you guys watching the show and the channel. Hope you got great information, good content tonight. Every Thursday we do the show. We'll be back again next week. We also do a lot of, you can see us on Instagram. We got to do a lot of reels on Instagram, a lot of content on Instagram. Okay, cool. Thank you, Adrian. Yeah, I appreciate you for touching base. We do a lot of stuff on YouTube, so I'm glad you guys tuned in tonight. I hope you got some good value out of the channel. We appreciate and value all your support. Please share this with anybody that you know that's going to get good value out of the channel. That's why we're here, to educate you, to empower you, give you the information. We've been doing lending for nearly 2 decades. Got almost 70,000 subscribers and like 12 million hours watched on YouTube. Like over almost 1,500 videos, guys, on YouTube. So, I hope you guys enjoy it and that you get good value. So, appreciate all of y'all watching the show and the channel. We'll be back again next week. Thank you so much. Take care and peace out. Stay strong, okay?